When people start in the world of trading, often think that both strategies very far-fetched, or start combining indicators that have nothing to do with each other, will make them end up being profitable in the long run. And this is something with which we must be very careful. In today's video, we are going to show you step by step how to use an indicator that, in a simple way, is going to provide us with just the market data we need to be profitable. As always, we can combine it with our operations and use it in cryptocurrencies, forex, stocks, indices, gold, or whatever we want. Welcome to the trader's game. And before we start, remember that in the description you have the links to join us in our Telegram community, where every day we post charts and analysis of what is happening in the financial markets, and also the trading bonus page, which has been updated and have added new promotions and free bonuses for all those who are starting in the world of trading. Do not forget to leave your email if you want to receive a weekly newsletter with everything that has happened during those days. The first thing we do is to place our main indicator, which is called Enhanced Wave Trend Oscillator. Click on it and it will appear something like this. It is a fairly simple indicator to understand from the branch of oscillators such as RSI or MACD, but in this case it also adds very valuable information of the trend movement of the market waves. At this moment we are in 5 minutes time frame, but we also recommend it in 15 minutes, 30 minutes, 1 hour or higher. That is to say, it works for any asset and time frame. We come to the configuration part, and as you can see, we have different options that we can change or choose according to our preferences. Where it says bar coloring, we can choose if we want to color the bars of the market price in the areas, for example, of reversals. We're going to give him to accept. And if we approach a little already, we can differentiate those candles that appear in blue color and also in bright pink color. This would help us to identify those concrete candles where a reversal of the trend takes place. This, of course, becomes much more useful in higher time frames such as daily, where normally, after those signals that the indicator also amplifies at the bottom, there is a trend reversal that can be larger or smaller depending on other parameters that we attack at that time. I personally don't like to color the candles, but for those of you who want to, you also have the option. In the style part again, we can customize it to our taste, but in this case we don't need to change anything to get the data we want. We just leave it as default and start looking for those entries. The first thing we have to look at is these little circles that the indicator leaves us, both when the price is in areas where it is considered oversold or, on the contrary, overbought. This is the main data that we have to control, but not the most important because, as you can see, in this central part we have a kind of histogram or waves that indicate the strength of that movement, which will show us the formation of possible divergences that would decorrelate the normal price with the usual data of an efficient market, and we will have to take advantage of these inefficiencies to launch our operations. For example, this part that we have here, where the price has been falling due to a big downtrend, and at this moment we see this blue point that would indicate not a specific entry signal, but that the market should change its short-term trend. So, what should we do at this moment? Should we enter directly in this candle and wait for the market to go up? Yes, we could do it perfectly, with spot trades without leverage, or if you are buying in different zones to average the price. But the most profitable is always to wait for a second break that gives rise to a divergence of the indicator with the price. That is to say, if the price continues to fall and the indicator shows us a crossover or a mountain, in this case, higher than the previous one, it is as if it made a higher low than the previous one. But of course the price has shown us the opposite. This is what we call divergence. And there, if you look at it, we could take that operation in a tighter way and nailing the best entry point to 100%. Another thing that I like to take into account in this indicator are those inner waves that we commented at the beginning, and that we should also review, so that again they are in a position of divergence with the price. That is to say, that while the price continues to fall, the waves move in the opposite direction. That is to say, that they make higher lows than the previous one. And we do not have to go far to find the second operation. The good thing about this indicator is that it combines many basic indicators in just one, but that they are basic does not mean they are less effective. But for those of you who are starting in the world of trading, it will be easier to get to see this information in a visual way only. I again warns us of the possible change in trend, and we must wait for some divergence occurs. Again, the indicator goes down while the price continues to rise. In the inner waves, we see that, again, we have another divergence, and the indicator marks the entry in this small candle here, which again represents the highest point where we could make that short effectively. In this case, the operation is very small, since it is always recommended to place a take profit with ratio 1.5 to 1 with this strategy. And if that, in the case of securing those profits, to leave another part of the operation to ratio 2 to 1 or even 3 to 1, but always taking most of the profits in the first take profit. With this, you have to always be very disciplined, because in the long term you are going to make a lot more money, even if sometimes, for example, you take profit in this area and the price keeps going up. You should not worry or go back to follow that price, but just take your profit and wait for the next setup. In this case, it would be the one we had here, where that 1.5 was very small, but again, we got out in profit. After a while, we have another opportunity again. The indicator continues down, but the price ends up going up a little bit more. Again, we have another perfect entry in the highest possible area, in just this candle here, to the millimeter. Here we could adjust the stop loss to this area of resistance that we had a few hours before, and from there, we would look for that 1.5 ratio. We collect it and continue leaving another bit of the operation up to 2 to 1 ratio. Again, full profit and 3 out of 3. A while later, we see a similar situation, but in this case, we do not have any red dot that indicates a possible entry. However, we have something more important, and it is that not only the indicator has almost reached that overbought zone, but we had already marked this wide resistance zone previously, and what happens is that the price is getting there. Of course, if we take into account that we know that this area is going to exert a lot of downward pressure, and we notice that, again, another divergence of the indicator with the price is formed again. In turn, we also have the inner soles also. With that divergence, we can interpret that this point is another good entry to make our operation. Keep in mind that we are in 5 minutes. They are fast operations, scalping style, and the important thing, as I say, is to adjust them perfectly, to look for that ratio 1.5 to 1 and take those profits, that profit, and go to the next one. That as we see again, the price bounces back to that resistance zone, while the indicator has already fallen a lot compared to the distance of the first mountain. That is to say, this part here is already much lower than this one here. And of course, the zone that the price had reached in this mountain is similar to the one that it has reached again, but the indicator is much lower. Again, although we do not have a fixed entry, we do not have a small circle, we could interpret that the resistance zone is going to have a lot of bearish force. And we will take advantage of this half divergence to again take another good operation in this cut of the indicator, which, as you can see, would come out again in maximum profit. We continue to move forward because, as you can see, we are recording this in the real market, live, so you can see how well this indicator works and again, what is happening here. We have a buy signal with the little circle. We wait for a divergence. The price keeps going down, although in this case we have here a spike, a shadow, whatever you want to call it. But we see that the close of the candle is much higher than the close down here. And in the indicator again, this second zone is above the first one. There is a very clear divergence. the yellow waves also go upwards. So right at the close of this candle, the indicator gives us the cut. And again, we launch again our 1.5 to 1, which as you can see is about to be confirmed, and we would take another profit. If you notice, we have not lost a single trade analyzing the market in this way, also relying on our basic knowledge of trading, but above all only trading when divergences occur. If we also count the small one we had here, so far we are 6-0 in just a day and a half of trading. Even so, this indicator does not have to be used alone. That is to say, you can adapt it perfectly to any type of operation that you have. It will always help you, and it will give you much more information. I also recommend to those of you who are starting to add the VWAP, that is to say, the volume weighted average price, because it basically gives us more data on those support and resistance zones and how far the price has moved away from that quote-unquote average of the day, where the price always tends to return again when it moves away from too much due to some extreme volatility situation. The VWAP will be very useful, especially if you trade assets such as cryptocurrencies, which are very volatile, or technology stocks such as Tesla, which have more pronounced movements, or even the NASDAQ. If you look at the VWAP, we could have even added another trade, as we can see that the price is moving a long way away from the VWAP, while the lower indicator remains oversold, and the yellow waves are increasingly producing an upward divergence. The indicators are also a little bit upwards, not too much, but it can be noticed, while the price has fallen in an exaggerated way and has moved further and further away from that average. And of course, we know that there is a very high probability that when such volatile movements occur, the price tends to return to the VWAP. Along with that, we add the divergence of the central waves and the indicators also with that small divergence in oversold zone. So again, if you look at that cut of the indicator that completes that divergence, we could take another entry waiting for the price to return to test the VWAP. Obviously, I would advise you again also to leave your trade with ratio 1.5. Take those profits. And maybe if the price is still far away from that average, leave a small part of the operation in case it continues to rise. In this particular case is what happens. But I repeat, very important always, that the fixed strategies, you do them with that discipline of not overextending, because it really will be harmful in the long term. And as always, I encourage you to try this indicator and this specific strategy for yourselves, and tell us in the comments below what you think of it. And we also invite all those of you who are looking for more advanced algorithmic indicators that give you all the data you need to trade automatically in the market, sell zones, buy zones, all the important information you need to trade. We will leave the link to our website and our community in the description. As always, see you in the next video of The Trader's Game.